Hello everyone, this is Bruno from Spainguru.es and this is the Spanish Taxes Overview Webinar 2026. Today is January 26th and it's 3 p.m. here in Malaga, Central European Time. I'm recording this webinar. I will send you a recording when we're finished. I'm going to do a presentation. You can ask your questions in the chat box in the bottom right corner of your screen. Just make sure to add a question mark at the end, so it's easy for me to see that you asked something, and I can also publish it for everyone to read. I normally address all the questions at the end of the presentation, but you can ask anytime during the presentation. Our objective is facilitating the relocation process for the English-speaking foreigners to Spain since 2014. We have very good reviews on Trustpilot, on Google, 281 reviews, 99% of them 5-star reviews, so you're in good hands. And you can use Spainguru.es for free. You can join my weekly newsletter. Today I sent one, 15,000 readers, YouTube channel with more than 1,000 videos, and now it's 8,250 subscribers, one video per Labor Day, and 2,000 articles in our blog, 8 webinars, and a huge community with an aggregated total of 150,000 members with many groups that you can join. So all this is absolutely free. I also have a Move to Spain checklist where you can see step by step what you need to do generally to move to Spain, starting as early as 1 year before moving to Spain. As I mentioned, I have 8 webinars now. I should update this slide actually, but if you need or want to engage with professional experts, I have personally vetted over the years immigration expert, tax advisors, financial planners, and many more experts, all personally vetted by me. Most of them, I use them personally as well. So you're in very good hands. A lot of people ask me, what's the difference between tax advisors, tax accountants, or gestores in Spain, and financial planners? Well, these 3 types of professionals, they complement each other and they work together. Tax advisors, they will design a strategy and planning and could potentially run a simulation of your taxes if you plan to move to Spain, adapted to your personal circumstances. Tax accountants or gestores, they will file your taxes, okay, and they will make sure that you are compliant with your obligations, meet your deadlines, etc. But they will not so much advise you on how to structure things so that your taxes are efficient. And financial planners are about the custody of your money. They're about your pension plans, your investments, how to structure them so that they have, let's say, less impact, okay, when you move to Spain, for example, from the States. This presentation is for general information only and it's not legal or financial advice or tax advice. For personal guidance, please consult with a qualified advisor. Find trusted experts on Spainguru.es, and Spainguru is not liable for errors or outcomes from using this information. The objectives of this webinar: first, gain an overview of Spanish taxes, understanding the key tax categories in Spain, and learning the basic principles of Spanish taxation. Then, preparing yourself to have better and more informed conversations with tax professionals so that you engage with them more effectively and ask better and more precise questions. Third, important, clarify the role of a professional tax advice. You will understand after this webinar for sure that this is just general information only and it will never replace personalized tax advice, and individual circumstances can significantly impact your tax liabilities. And last but not least, learning about potential tax implications with a focus on US and UK nationals. But I would say 95% of the content of this webinar applies to anyone moving to Spain, and being aware of compliance requirements and deadlines to avoid potential penalties. So all that you will get in this hour. Let's talk first about Spanish tax residency. You can see there's a question about that. First of all, you become a tax resident in Spain and must pay tax on your global income and potentially on the net value of your assets if any of the 3 conditions apply. The most common, if you spend 183 days or more in Spain within a calendar year or a tax year in Spain. The tax year in Spain starts on January 1st and ends on December 31st. The days you spend in Spain are not or don't have to be consecutive to count. And it doesn't matter your immigration status. For example, if you come to Spain in a given calendar year as a tourist, for example, in a scouting trip at the beginning of the year, those days will count towards your tax residency. You spend here 2 months, and then you move holding a visa later in the same calendar year. You need to add those days that you spend in Spain as a tourist, okay, to your tax residency count. So it's very, very important. Your main economic activity is the second condition. Okay, so if your primary income source is from Spain or generated in Spain, then you could become a Spanish tax resident. And third, if your family lives in Spain. Okay, so family ties, any of these, right? So there's an important date to have in mind, which is July 2nd, because after July 2nd, there's only 182 days left in the calendar year, because as we said, on January 1st, a new tax year begins, right? So if you are not in Spain, physically in Spain, until July 2nd, then you can move after July 2nd, spend every single year until the end of the tax year, and you'll be sure that you spend less than 183 days, therefore not becoming a Spanish tax resident. So it's important that you verify your travel records so that you count every presence in Spain. And sometimes, depending where you move from and in which moment of the year, different tax authorities from different countries could deem you to be tax resident in those jurisdictions. For that, it's always good also to refer to double taxation agreements between Spain and other countries. Spain has more than 90 agreements between countries, including the USA, UK, Canada, Australia, etc., where they have tiebreaker rules that help tax authorities, okay, to understand or to define whether you are a tax resident or not in a given tax year. So what are the consequences of becoming a tax resident in Spain? First of all, you will be subject to taxation on your worldwide income and potentially on the net value of your assets via the wealth tax and the solidarity tax, okay? Now, if you are non-tax resident in Spain, only the income that is generated from Spain, for example, you own a property and you rent it out, that income pays tax as a non-resident. And here's very important difference between the tax year and the Spanish immigration year. These are different things. Spanish tax year, as we saw, is a calendar year, begins on January 1st, ends on December 31st. But the immigration year, it's a natural year. That begins when your residency is activated, right? So for example, you apply for a non-lucrative visa in April, you get it in June, and you move in July, you enter Spain during your visa validity period, and your residency should start in July when you enter Spain. And that's your immigration year. You will go 365 days after your entry to Spain within a visa validity period. So you can play with this. You can see here that one calendar year and an immigration year may or not overlap perfectly, right? You could perfectly stay more than half of an immigration year without having to stay more than half of a tax year. Okay, so you can play with that. Now, we mentioned that for income source from Spain, even if you don't comply with any of these tax residency conditions, any of the three ones, you will pay taxes on your income source from Spain. If you're a non-EU EEA resident passport holder, you would pay generally a 24% flat rate on your income generated from Spain, depending on the type of income, right? Now, if you are EU passport holder, you would pay better tax rates as a non-resident from income source in Spain. Let's talk about tax systems and obligations in Spain. First, let's talk about the general tax regime and the special tax regime, also known as the Beckham Law. Let's talk about the general tax regime. There you include the personal income tax, or IRPF, the wealth tax is a regional tax, Impuesto sobre el Patrimonio, the solidarity tax, which is a nationwide wealth tax at a higher threshold, and the 720 form, informative form, is not properly a tax. It's a form where you inform about the value and existence of overseas assets over a certain threshold. Then you have the special tax regime, or Beckham Law, where let's be clear. Not many people are eligible for this special tax regime. Generally, 99.9% of cases are employees who move to Spain, either to work for Spanish companies or under the digital nomad visa entrepreneur law as employees and not as contractors or autonomous. Okay, this is important. Now, if you are eligible for this tax regime, it has advantages, very, very big advantages, and some disadvantages. And because of those disadvantages, tax experts recommend that if you're making less than 60,000 euros of annual taxable income, it's better to enroll in the general tax regime because you will have allowances, deductions, etc. And you will end up paying less money or the same as taxes, but with less, let's say, administrative burden. Okay. Now, if you're making more than 60K per year of taxable income, definitely it's interesting to evaluate registering, if you're eligible, of course, for the special tax regime, because you wouldn't pay income. You wouldn't pay tax on your income outside of Spain, okay, except for employment income. Then you would pay for worldwide income. And when you pay taxes, you would pay 24% tax rate, flat rate, okay? You wouldn't have to pay wealth tax. You wouldn't have to submit your 720 form and many other perks, okay? Now let's talk about the first tax obligation, reporting the 720 form. And the deadline is very soon, 31st of March. And actually, if you're working with a tax accountant or gestor, you should already start gathering the paperwork, the certificates, and etc. in order to file this before that deadline. This is about declaring the value of your assets outside of Spain. And when do you have to declare? First of all, when you become a Spanish tax resident. Second, you would divide your assets by categories. For example, bank accounts, real estate, stocks, etc. And if any of those categories are 50,000 euros or more, you have to declare everything inside that category. To give you an example, you have 2 bank accounts outside of Spain, and in each of those 2 bank accounts, you have 25,000 euros. The total category of bank accounts outside of Spain has 50,000 euros. You need to file 720 and declare the existence of those 2 bank accounts and specify how much money there is in them. Okay, this is an example. Or properties abroad, right? Like real estate. So there is a first year requirement. When you become a Spanish tax resident, you always have to file the 720 form if any of these categories are 50,000 euros or more. But then you don't have to declare it unless there are changes in each of the asset category of 20,000 euros or more, or if there are asset closures. Okay, so this is about the 720 form. It's not a tax per se, it's an informative form where tax authorities in Spain see if you have certain assets or rights abroad that may potentially, potentially become taxable at some point, right? Cryptocurrencies, it's not really the 720 form, it's Modelo 721, okay? It is quite new, but yes, you also have to declare the value of cryptocurrencies held abroad. So this is the 720 form. The second tax obligation is the income tax filing, okay, or IRPF, okay? So everyone in Spain needs to file the income tax. The annual income tax deadline is on June 30th. So on June 30th, 2026, we're going to be paying the income tax of all the tax year of 2025. Okay, and there are different types of income. You have ordinary income and investment income with different tax rates. Ordinary income is subject to progressive tax rates that go from 19% to 47%, roughly. There is a, let's say, a national part and a local part, like in the States, like federal and state. Within the ordinary income, you find salaries, rental income, and business earnings, okay? And inside the investment incomes, you will find dividends, interest, capital gains tax, but these are taxed at lower rates, progressive rates as well, from 19% to 30% brackets. Normally, also, you start preparing the annual income tax 3 months before the deadline, that is April 1st. But if you're autonomo or contractor in Spain, not only you need to file annually, you also have to do quarterly filings and also payments, okay? You pay in advance a certain percentage, and then annually you would pay the difference. Special focus on US citizens. If you are a US passport holder, you probably know you always have to file taxes in the US, regardless whether you're a tax resident in the US, you're living abroad, you always have to file if you're over 18. And the deadline for doing so is April. Now, if you file your taxes, if you live abroad, you have an automatic extension until mid of June to do it, okay? And then you can also request another extension until October, paying some interest. So there is a, let's say, a discussion among Americans whether it is better to pay your taxes in Spain and then in the US or vice versa. The answer is, it's not very clear, depending how or what type of taxes you need to pay. It is better to do it first in one country and then in another country. Most people tend to say that you would pay first in Spain, where you're a tax resident, okay? Because what you have to pay in one country you will be able to credit it towards what you need to pay in the second country. So if you pay taxes in Spain first, you get the invoice, let's say, of what you paid in Spain, and then when you go to file your taxes in the US, you will credit those payments towards the payment of your taxes in the States. Therefore, you will be paying zero in the States, because usually taxes in the US are lower, okay, generally. So this is about US citizens. Now, let's talk about how the progressive tax brackets work. So many taxes in Spain have progressive tax brackets, like the income tax or capital gains tax, etc., right? And one of the big questions is, when people look at the brackets, they say like, whoa, if I make 100,000 euros taxable income, is it true that I have to pay 45% tax? Because if you look at the tax brackets for income tax, you will see on the right, there's the table. You have the different brackets, starting at 19 and going all the way up to 47%. The fifth bracket, so for incomes between 60,000 and 300,000 euros, pay 45% tax, right? So 100K would fall into that bracket. That is correct. However, the way you calculate these progressive tax brackets, and this applies to every tax using progressive brackets, is that for the first 12,450 euros that you make, you would be paying 19%. Then for the next 7,500 euros that you make, you would pay 24% tax. For the next 15,000 euros, roughly 30%, etc. Therefore, you would be paying a sort of average or median of those tax brackets, and making it that for 100K of taxable income, you will be paying an effective tax rate of 36%. Okay, these are all illustrative numbers for, as an example, right, without allowances or deductions or anything, but it's just so that you see how the progressive tax brackets are applied in different taxes, and also to demystify one of the common things that we would hear, that for 100K you would be paying 45% of your income, which is not true. And actually, here there is a table or a chart. If you make 30K, you will be paying an effective tax rate of 24%. And then you can see the progression, and that's why they're called progressive tax brackets. 40K, you would pay an effective tax rate of 26%, for 50K, 29%, etc., all the way up to 100K, which is a 36% effective tax rate. Now, let's talk about the third tax obligation, wealth and solidarity taxes. First of all, the wealth tax, it is a regional tax. And it is based or calculated on your net wealth as of December 31st of the last taxable year, right? It is a regional tax, so there's strong variations depending on the region where you live in Spain, where you're a tax resident. So if you live in Catalonia, it's different than if you live in Madrid or Andalusia, for example. For example, Catalonia is very unfavorable. It has a very low threshold. So if your net wealth is over 500,000 euros, you're already inside taxable territory. Whereas Madrid or Andalusia, also Cantabria and Extremadura, but for sure Madrid and Andalusia, they have either no wealth tax or 100% rebate over that tax, effectively making it that there is no wealth tax, okay, in Madrid and Andalusia, right? Valencia, they raised the threshold to kick in this tax to 1 million euros, okay? So in 2026, it's already enforced. this new threshold for Valencia. Another thing I wanted to mention is the 60% rule, which will limit the wealth tax liability to 60% of your taxable income. So using this rule, you can reduce the wealth tax impact to up to 80%. And this is especially interesting for people who have a big net worth, okay, but small income in comparison or relative to the high net worth that they have. So in summary, wealth tax plus income tax, if those two are over 60% of your taxable income, then you can reduce to 60%. Okay, so this is something that you have to have in mind. And the filing for the regional wealth tax is June 30th, same as the annual income tax. You also start to prepare it 3 months before. And then let's talk about the nationwide solidarity tax. Okay, this is for all the Spanish territory. Doesn't matter where you live, anywhere in Spain that would apply to you. But the good news are that the threshold to start taxing is 3 million euros net worth, okay, which is much higher than the usual 500,000, 700,000 euros of the wealth tax, regional wealth tax. So 3 million euros plus a general exemption of 700,000 euros. So typically 3.7 million euros net worth. And then there are allowances, deductions, or whatever you have paid in the region where you live as wealth tax. You can also credit it towards the payment of the national solidarity tax. And in order to do so, the deadline is 1 month after than the wealth tax, which is July 31st. Okay, and here you have a table with the different wealth tax situations in the most common regions where people move: Madrid, Andalucía, Valencia, Catalonia, Murcia, Basque Country. Okay, it's a bit noisy, and I'm gonna send you a recording. You can watch it in the recording later on. But let's talk about examples, okay? For example, if you live in Catalonia, which is, as I said, not the best region to live in terms of wealth tax, imagine that you're an individual, your net worth is 1 million euros, and we said that the threshold is only 500,000 euros. Therefore, you will need to pay wealth tax from 500,000 euros, okay? But you have a home, okay, somewhere in Spanish territory, right? So you can deduct up to 300,000 euros of your home value. So the threshold goes up to 800,000 euros. Therefore, the taxable wealth is only 200,000 euros. You apply the progressive tax brackets, you pay less than 500 euros that year as wealth tax. If your net worth is 1.5 million, you pay 3,000 euros. For 2 million, you pay 8,000 euros. 2.5 million, almost 14,000 euros. If you are over 3 million, then the solidarity tax kicks in. You need to apply the allowance, etc., etc. And if you paid something for wealth tax, you will credit it towards it. Here's a comparison between Madrid, Valencia, and Catalonia. As we said, in Madrid, there's a 100% rebate. So whatever you had to pay is actually zero. This is, for example, if you own 2 million euros of assets, right? So 0% in Madrid. Valencia, the threshold is 1 million. You have an allowance of 700,000 euros. You apply the progressive tax brackets, you will pay 3,500 euros for 2 million euros in assets, okay? And in Catalonia, since the threshold is lower, you will be paying 7,200 euros. So there is a big difference depending on where you move in Spain in terms of the regional wealth tax. Now let's talk about digital nomads. What about taxes for people who move to Spain under the digital nomad visa? There's 2 ways to move to Spain in terms of your work status. Either you move as an employee working for a company outside of Spain, or as a contractor, right? And if you move as a contractor, it's very different than if you move as an employee. If you move as an employee, there's 2 options. Either you submit a certificate of coverage stating that you're paying Social Security in your home country, or your company opens a company in Spain and pays Social Security in Spain for you in your payroll as an employee. Whole thing is, if you move as an employee and you comply with other requirements, you could potentially be eligible for the Beckham law, right? And be careful, because the certificate of coverage now for W-2 employees from the US, you have to have a specific wording to be valid, and only the certificate of coverage of UK, Canada, Russia are accepted right now, apart from the US one. So be careful with that. And if you're moving as a contractor, the story changes. Because as we said, not only you need to file annual taxes, you also have to file quarterly. You will have to file your income tax quarterly and annually, of course, like everyone else. Also your VAT payments. If you have intracommunitarian operations, business operations, you also have to file another form, 349. And you are, let's say, responsible for filing your own taxes. Okay, so, and for this, I highly recommend you filing taxes using a gestor, okay, or tax accountant, because they change all the time. It's impossible to stay updated, and Spanish taxation is very, like Kafkian, very complex. So highly don't recommend it. I'm not doing it myself, and I am an autónomo. I'm a Spanish speaker, and as you can see, I'm not an expert, but I have a certain knowledge about taxes, and still I rely on my gestor because it's really crazy. So a lot of people ask, like, can I do it myself? Can I use a software, etc.? Highly not recommended. Engage with a professional. They're not that expensive, but unfortunately, you'll have to do it. Now let's talk about a specific example. Case study of someone who moved to Spain as a digital nomad and arrived in September 2024. That is post July 2nd, which is less than 183 days in Spain, technically making it not a Spanish non-resident, right? So moved in September 2024, applied for the DNB in October, approved for DNB in November, and in December registered as autónomo. How does this person pay taxes on all the income that this person generated in Spain, okay, before becoming a Spanish tax resident? Or is this person considered a tax resident? Well, an expert in one of the communities said this is a particularly gray area, as you weren't resident until you got your residency card. So you weren't even officially allowed to work, but you're supposed to pay tax in the country where you're physically working. So strictly speaking, on any work performed since September. And of course, this person was working with a laptop, okay, in Spanish soil. So what a tax expert would say, with all the income that is produced from Spanish soil, okay, could be a rental property, but also if you're working on your laptop for other customers abroad, but you are performing your job from within Spanish territory, all that income needs to pay taxes at least as a Spanish non-resident. And then the next year, when you become a Spanish tax resident, this person will pay taxes as a Spanish tax resident. Also, when you're a contractor, you need to pay Social Security to Spain. Social Security will enable you, grant you access to the public healthcare system, pension, maternal or paternal leave, and many other things, okay? And depends the level of income that you have, a certain monthly payment will need to be paid, okay? So normally the first year you start with 80, 90 euros. Then if you move as a digital nomad, it goes up normally to 300 euros per month. And then depending on the income that you declare, you have to set it to the level of income depending on, the quota needs to match the level of income, okay? And there are talks with the government and Association of Contractors that this will not be chosen by you as an autónomo, but it will happen automatically, okay? So depending on the level of income that you declared the previous year, they will put your Social Security contribution at that level, okay? And they also want to increase the Social Security contributions, but this, we don't know exactly how it's going to happen, but there is a plan until 2032 to increase them, okay? If you want to know more about this visa type, you can join my next Digital Nomad Visa webinar next month. And of course, you're welcome to join. It's free. You get a recording. And remember that there's a Q&A session at the end of this webinar. And if you need to leave earlier or, and you want to leave a review, please, this button redirects you to Trustpilot. You can leave a review there if you think this information is valuable and help me so other people find me. That would be awesome. And of course, if you're watching this on YouTube, please leave a like, subscribe. And if you have any questions, please leave a comment below with your question. Now let's continue with additional taxes in Spain. Let's talk about, there's many more taxes, unfortunately, but these are a few that I want you to have in mind. First, inheritance and gift tax. These are regional tax. It's all over Spain, but depending where you live or where you die, the effective tax rates are different. They say that it's much cheaper to die in Madrid than dying in Catalonia. Okay, you pay many more taxes. It will also depend not only on the region, but also the connection that there is between the heir and the recipient, or the recipient, okay, and where the assets locations are. And also you will have different tax reductions and exemptions depending on the region. So it is important to study where you move in Spain also for your implications. Then another tax I wanted to talk about is transfer tax, impuesto de transmisiones patrimoniales, or ITP. So this is when you buy property in Spain. So when you buy real estate, there's two options. Either you buy new built property or you buy a second-hand property. When you buy new built property, there is a common VAT of 10% for all the Spanish territory. Matt, when you buy a second-hand property, depending on the region where the property is located, you would pay a ITP, or transfer tax. Cheapest region in Spain, Madrid, of course, 6% only. Andalusia, 7%, 8%, depending on the value of the property. Then you have Catalonia and Valencia in higher levels, like 10%, 11%, depending on the value of the property, etc. Okay. Now, let's talk about property tax. Once you own real estate, you will pay property tax. Okay. The good news are that property tax in Spain tends to be much cheaper than, for example, in the US. Americans report paying transfer tax here in Spain. They say that what they pay in a single month in the US for a similar property, you would pay it annually here. So, for example, for 100 square meters property here in Malaga, you will be paying around 350 euros of property tax. Then there is the municipal capital gains tax, not to be confused with the general capital gains tax. Okay, so if you sell your property from Spain, you will be paying not only taxes on the proceeds, okay, not only taxes on the proceeds of your sale for the capital gains tax in your annual income tax, but also you will be paying the plusvalía municipal, or municipal capital gains tax, which is a local town hall tax based. There are two ways of calculating it, and they will run the two calculations and tell you the one that is better for you. Basically, they do that in the office in front of you. And basically, it's based on the increase of the land value, okay? And this, of course, if you sell your property from Spain. If you're moving to Spain from the US, UK, etc., and you sell your home, if you're a Spanish tax resident, be careful. You could pay capital gains tax on the sale of your home in your origin country to Spanish tax authorities, if you're a Spanish tax resident when you do so, okay? There's been a lot of scandal, could we say that? Because our Prime Minister, Mr. Pedro Sánchez, announced that the ITP, or transfer tax, should be raised to the value of the property, 100% of the value of the property. That is, for non-EU passport holders who are non-Spanish tax residents buying property in Spain, that group of people, when they buy a property in Spain, for example, 300,000 euros, they should pay 300,000 euros of transfer tax, okay? Because, of course, this government has a mission which is solving the housing crisis that we have here in Spain, and this is one of the measures that they proposed, and they've been discussing, etc. I interview Ainhoa Manero, Externo Abogados, expert immigration lawyer, and also Marco González, expert tax lawyer, and they said that from a legal perspective, it is extremely hard that this becomes a reality, and it sounds more to be a political announcement rather than something really true that would be happening. Also, I ran some numbers, and I found out that only 2.7% of the transactions in 2024 were done by people in this group, non-EU passport holders and non-EU, non-Spanish tax residents. And of course, some people are buying property and then they become Spanish tax residents. They just buy the property before just to live there, so even lower than that. So of course, this wouldn't really solve by any means the housing crisis in Spain or mitigate it at all. So it really wouldn't change anything. Now let's talk about capital gains tax. Okay, how can I avoid the Spanish capital gains tax? A lot of people also ask this, right? So first of all, the capital gains tax, there's ways to mitigate it or not pay it at all. Okay, so for example, if you're over 65 years of age and you're selling your property where you lived the last 3 years, it's your main property, and you use the proceeds into to buy another home in Spain, etc., then you can avoid paying capital gains tax, but you need to prove all this, and it is cumbersome. Okay, a lot of paperwork. If you're moving to Spain and selling your home in your origin country, where many times there's no capital gains at all, in order to avoid it, the best is to time the moment of your sale of the property together when you move to Spain. Easier way to see it: sell your home when you are not a Spanish tax resident. Easy example: you sell your property on December 31st and you move to Spain on January 1st. Different tax years, right? Second option is if you sell during the same tax year. Remember, it's a calendar year from January 1st. You sell your home in January, get your visa in April, move to Spain later on. Make sure not to spend 183 days in Spain. Therefore, if you haven't spent a single minute in Spain, move after July 2nd. Okay, or if you move before July 2nd, make sure to be out of Spain and be able to prove it very clearly that you've spent less than 183 days during that calendar year. Because once you become a Spanish tax resident during that calendar year, it is retroactive to the whole calendar year. So anything that you did from January 1st that year could be potentially a taxable event. So be careful with that. Yes. Now let's talk about the brackets for capital gains tax. It is, let's say, investment income. So second type of income for the income tax. So the tax brackets are lowered from 19% to 30% instead of 47%. So if you apply this, for example, round numbers, you bought a property for 100K, sold it for 200, and the capital gains was 100K. You apply the tax brackets, then you get 22% effective tax rate. You would have to pay 22,000 euros for those proceeds as capital gains tax to Spanish tax authorities. Retiring in Spain, is your pension taxable? $1 million question as well. First of all, once you become a Spanish tax resident, remember your income worldwide potentially is taxed, okay? The threshold for declaring pensions is, if you only have one source of income, is 22,000 euros annually. Below that, you don't have to declare. But if you have multiple income sources, the threshold goes down to 12,000 euros of aggregate income and only 1,500 euros from secondary sources. Now, here's the trick. Pensions from abroad appear as a second payer, so if they're greater than 1,500 euros per year, a declaration must be made. And for general ordinary pensions, a progressive tax rate from 19% to 47% apply. Now, thanks to Spanish US or Spanish UK double taxation agreements, remember that Social Security and private pensions are always taxable, but government or public pensions are exempt, okay? People mention that if potentially after a certain time, generally 10 years, if you become a Spanish citizen, if you become eligible and you apply for it and you get the Spanish passport, and you were benefiting from a tax-exempt public pension in Spain, you could potentially lose that right, okay? But I have asked this to immigration lawyers, and they said no, okay? So, of course, none of this is legal advice or anything, but it is also one of the questions that people ask. Also, there are allowances for pensioners. Ages 65 to 74 is 6,700 euros. Annual allowance, and over 75, it goes up to 8,100 euros. Another big one is taxation of American 401ks and Roth IRAs in Spain. 401ks, distributions are taxed as general income, as progressive rates from 19 to 47%, traditionally exempt from Modelo 720 reporting and wealth tax, but caution is advised, as many people and tax advisors are recommending to also including it in the Modelo 720. Roth IRAs taxation, investment gains taxed as income as progressive rates up to 30%. This is investment gains and must be reported in Modelo 720 annually based on the account surrender value as of December 31st. course, always if the category is over 50,000 euros and could be potentially subject to both tax calculation. As we said, it's regional, so rates varying by region. And some key considerations. There's been an interesting thing happening, a consulta vinculante. This is when an individual asks to the tax authorities to write, their interpretation of a rule, okay? And a person asked to the tax authorities, should I declare my IRA and 401ks into the Form 720? And the tax authority said, yes, okay? Tax authorities are not judges, they are not courts, okay? But this is the situation now. So work with an experienced tax expert that knows about all this, how the 401ks work, how the Roth IRAs work, so that they can advise you what is being on the safe side and what is not. Okay, so that's very important. Of course, you can find my vetted recommendations on Spainguru.es. I have written many articles about taxes, okay, and 401ks and Roth IRAs. Just check all those articles, especially if you are American or British. You have a lot of information that focuses on that situation. Now let's talk about non-lucrative visa. Do I have to become a tax resident in order to renew my NLV? This is a big one, especially after May 20th, 2025, because the Reglamento de Extranjería, or the bylaw, or the ruling of the law, changed, took effect, a new one, and stipulated that in order to renew a temporary visa in Spain, you need to spend at least 183 days in Spain. Sick, okay? I mean, exactly textual. So when they say 183 days in Spain, of course, rings a bell. You say like, oh, the minimum stay, the minimum time that I need to spend in Spain in order to become a tax resident. But in fact, the ruling is talking about the immigration year, which is the natural year that begins when your residency starts. So it really is not the tax year. So this is the first, let's say, misconception about it. Second of all, is that there is a Supreme Court ruling that actually, thanks to that ruling, the previous Reglamento de Extranjería had to delete a minimum stay requirement of 180 days. They deleted it, okay? Because this Supreme Court ruling said that if they want to include a minimum stay to renew your visa, they need to do it in the main organic law and not the regulation of the law, or Reglamento de Extranjería, which is hierarchically lower than the main organic law. So this 183-day rule is again against what the Supreme Court said. Okay, so it is not enforceable, right? So you can, in fact, play with this. If you spend less than 183 days in an immigration year, you would still be able to renew your visa. And if they deny you your visa, you have an extremely strong case, almost 100% chance to win and get your visa renewed if you bring this to court. Okay, this is the words of Ainhoa Manero of Terna Abogados, which I highly recommend. You can see my videos with her, interviewing her, both in the Spainguru's channel and also in Sterna's channel. And so it's very knowledgeable and she knows how things work. And I have a specific video with her on Spainguru's YouTube channel. You have there the QR where she speaks about it. So basically the answer is you don't have to become a Spanish tax resident if you want to renew your non-lucrative visa or any other temporary visa. Now, be careful, caveat here. This is just to renew. If you're planning to get your long-term residency, if you're planning to apply for Spanish citizenship, all those processes, they have their own minimum stay requirements that you need to comply, right? So always, 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 always check with an experienced immigration lawyer who can recommend you the best strategy, right? And of course, join my non-lucrative visa webinar that I hold every 15 days. It is free. I record it. And of course, you are welcome to join. Now, I try to condense everything in one single cheat sheet, everything that we said today. And here it goes. First, we talk about tax residency. Remember the 3 rules. Most important, if you spend more than 183 days in a calendar year, you would become a Spanish tax resident. Therefore, you will be liable to pay to tax authorities taxes on your worldwide income and potentially on the net value of your assets. Second, if your main income is sourced from Spain. Third, if your family lives in Spain. As a non-tax resident, you would only pay taxes for your income source in Spain. 2, key tax obligations. First, March 31st, deadline for Modelo 720. It's an informative form where you declare the existence of assets abroad. Okay, divided by categories, minimum 50,000 euros per categories, and you would only have to file again if there are variations of more than 20,000 euros or asset closures. Then the personal income tax, we said, progressive tax rates from 19% to 47%, or investment income from 19% to 30%. The deadline, the annual deadline is June 30th. Wealth tax is regional tax, so depending where you live, it will, the threshold that where it kicks in is lower or non-existent, like in Madrid and Andalusia. And then there is the solidarity tax, which is a nationwide wealth tax, but the threshold starts at 3 million euros plus a 700,000 allowance. So yes, much higher. And then we talked about the special tax regime called Beckham Law, which has the incredible perk that you only pay a flat 24% tax on your employment income worldwide, but then you wouldn't pay taxes for any other type of income. You wouldn't file wealth tax. You wouldn't have to file Modelo 720, many other things. On the other hand, if you make this less than 60,000 euros, potentially it's not really advantageous, even worse. Then we spoke about taxation of pensions. Remember that Social Security and private pensions are taxable in Spain under the general tax regime. And thanks to the taxation agreements, government or public pensions may be exempt. Then we spoke about 401ks, Roth IRAs, and how you declare them in the 720 and what type of taxes they paid. And certain, let's say, be careful always when you have this type of accounts or investment instruments, not only consult with tax advisors, but also I would recommend you to consult with financial planners, because they know a lot about this and how you can put it, how you can structure these investments. Actually, last week, I did a webinar together with AJB Global experts, Matthew Quinn and Robert Hoey. And for an hour, they spoke about all this and did a presentation and a case study. So this is a video that I published last week that you can watch.
Welcome, everyone. Thank you so much for joining today.
And
I'm Bruno Bianchi Sarcone. I run Spainguru.es.
Yeah.
And today we're having two special guests. We have Matthew Quinn and Robert Hoey.
Sorry for that. I didn't know how to use it very well. But yeah, basically watch that video. Yes, and join the next webinar. And of course, you get a free consultation with them if you want. So yeah, doesn't hurt having one. Then we spoke about taxes for digital nomads. If you move as employee, the advantage, you could be potentially eligible for Beckham Law. If you move as a contractor or autonomo, remember you have to pay Social Security in Spain monthly and also file taxes not only annually but also quarterly, and potentially not being eligible for Beckham Law. Then we spoke about additional taxes, regional inheritance and gift tax, property tax once you own property in Spain, capital gains tax if you're selling property outside or inside Spain, transfer tax if you buy second-hand property, general 10% VAT if you buy new build property, and the deadlines. We said the first deadline, you have the 720 form now, around the corner, March 31st, personal income tax, June 30th, regional wealth tax, June 30th, solidarity tax, July 31st, and if you're autonomous, quarterly payments as well. Okay, so always remember, you can find my vetted professionals on Spainguru.es. They're ready to help. You have very good reviews about Spainguru. You are in good hands. These are trusted professionals. You can join my free webinars anytime, and you can stay in touch with me at hello@Spainguru.es. I always answer my emails. At least I will point you in the right directions, give you tools, give you communities that you can join where you can engage with other people and ask them questions as well. And of course, I'll do my best to help you. Okay, remember that now we start our Q&A session. You can ask your questions. Always add a question mark at the end so I can publish it for others to read. And if you need to leave earlier for any reason, you can always leave a review on Trustpilot. There's the button there on the top. And if you're watching this on YouTube, please give the video a like, subscribe to the channel, push the bell button, and leave a comment, right? So let's go with the questions. And remember, I'm not a tax advisor. This is not legal or tax or financial advice. And let's go. Assuming our own income as married couple in the U.S. Social Security, how can I calculate a rough estimate of my Spanish taxes? Social Security pays taxes between 19% to 47% progressive tax brackets. I mentioned in this presentation how you calculate them, okay, but you could potentially, now that you understand how this works, maybe you can use the free version of ChatGPT or any AI tool and tell them, like, this is what I make, as a married couple, calculate the income tax in Spain, okay? But of course, I'm not saying AI tools will replace a tax advisor or a professional, but will give you a general idea on how much you would be paying if you move to Spain, okay? And of course, if you have specific circumstances, they may also have a very strong impact on your tax liability in Spain. So it's always good to engage with a professional. What if I obtain a non-lucrative visa but don't spend 183 days in a calendar year physically living in Spain? So then you wouldn't become a tax resident in this case, unless you trigger any of the other two conditions, okay? Main income tax from Spain, and second, your family lives in Spain, okay? This happens, okay? For example, a lot of people ask, like, yeah, my husband works in Dubai, he won't move, he will be sending me money every month, and me and my family, the rest of the family, will live in Spain. Well, be careful, because if all the family lives in Spain, and if the husband is still working in Dubai, he could be considered to be a tax resident in Spain. It's not a black and white thing. The Spanish tax authorities may do an assessment, okay, of your situation and say, oh, no, be careful, you're a tax resident, even if you spend less than 183 days in a calendar year in Spain, right? So be careful with that. Always consult with a tax expert. What if my partner, and also I wanted to say, like, you can obtain your non-lucrative visa. Well, first of all, when you obtain your non-lucrative visa, they don't ask you, like, how long you're going to be spending in Spain. Okay, first of all, you will be able to obtain it, that's for sure. Okay, they don't ask you, now will you become a Spanish tax resident? No, they don't ask you that. You need to be over a certain financial threshold, have private health insurance if you're not UK retiree, etc. Okay, so that's not a condition to obtain it, but then to keep it and to renew it also. And also, if you plan to apply after 5 years for the long-term residency, you cannot be outside of Spain more than 10 months in 5 years, etc. There's many, many things that you need to consider, not only the Spanish tax residency. Next one. What if my partner and I aren't legally married? She may be considered as making me a tax resident if we are not legally married. So I understand this is for the third rule. Like, what if my family... I don't know. This is a very, let's say, nuanced question. I don't understand the whole situation. But also, if I understood it, I wouldn't be very, very sure, or, I wouldn't be very serious at telling you a professional assessment about this, right? You need to consult. In my opinion, if you're not married, if you don't have a residency that is linked to the partner, let's say, to your couple, let's say, and there is no, let's say, connection from an immigratory status, then I don't see how authorities may track this in a way or enforce it, right? So I don't see it, but there are ways to obtain residencies without being legally married. You can be, for example, let's say, legal partnerships or pareja estable, okay, like proving cohabitation or having children together, etc. So if you got residency as a non-married couple, but still the immigration authorities can see that status somewhere, then they would have an argument against you in that sense. Will you share these slides on your website or after the presentation? Unfortunately not, but I'm going to send you the free recording of this video and uploading it to YouTube, so you can give it a like, subscribe, and take all the screenshots you want and watch it again. And also, you can join my next webinar for free. They're always free. I had more than 80 webinars in the last year. They're all free. I have 3 sources of income. First, military pension. 2, Veterans Administration disability pension. 3, Social Security disability, non-Social Security retirement pension. Which will I pay taxes on? And 2, which country, USA or Spain. Does Spain tax disability pensions from Veterans Administration? This is not taxable in the USA, and Social Security disability. So you need to read the double taxation agreement between the US and Spain. You search. You just type this on Google. And the IRS has the PDF. So read the law first of all before engaging with a professional. But as far as I understand, public pensions and military pensions, veteran pensions, etc., those are under this scope. Yes, so people who move with this type of pensions, they're exempt to pay taxes in Spain in this case. And I understand that USA is the origin country. Then you would be liable for paying the taxes that you need to pay in the USA for these pensions. This is according to the Spanish double taxation agreement. Wealth tax only applies once you become a tax resident? Yes, exactly. And a specific tax resident of a specific region, right? This is the regional wealth tax, okay? And then there is the solidarity tax, over that tax at a higher threshold of 3.7 million, including the allowance. So yes, if you're not tax resident, you don't have to file a wealth tax in Spain. Or if you're under the special tax regime, Beckham law, neither you need to become, to file your wealth tax. As far as I understand, if I started my DNV in 2024, after July 2nd, just like the case that we published, so not a tax resident and in 2025, I was a full tax resident, when do I need to declare my worldwide wealth? 2025 or now in 2026? My understanding is you declare your wealth tax once you're a Spanish tax resident. If you became in 2025, it is for the net value of your assets and right held abroad at December 31st, 2025. Then you declare in 2026. June 30th is your annual limit. My personal opinion, this is not legal or financial advice. If I have a private pension, not active yet, as I am not of age, is this part of my wealth or only when I start receiving it I pay tax? So be careful what you call pension, okay? Because if you're from the US or in other countries that have, investment accounts, like Roth IRAs, like sometimes people call those pensions, okay? So be careful. If it's truly a pension, okay, that you don't pay taxes on your pension that you still receive. Like for example, I'm 46, and one day I hope to receive my pension. Okay, I'm not paying taxes on the pension that I didn't receive. That's for sure. Okay, now if I have investment instruments that people typically put them together into their retirement plans, etc., be careful because each of those instruments, they have different, let's say, categories and could be potentially needed to be included in the 720 form. When you have distributions, you pay taxes, etc., etc. Tarragona is part of Catalonia. Yes. Is there any difference in taxes, for example, from Barcelona? Well, depending on which tax, okay? So there are taxes that are regional, there are taxes that are national, and there are taxes that are local, okay? Like municipal tax, EV transfer tax. Transfer tax is regional tax. So for example, the regional tax, I live in Andalusia, so you have Seville, Córdoba, Granada, Malaga. We all have the same transfer tax when we buy a second-hand property, okay? But I pay different EV, okay, or property tax, okay, even within the same province of Malaga. If I live in Malaga City, I pay different property tax than if I live in Torremolinos, for example, or Marbella. Marbella is high. Okay, Torremolinos is high, but Malaga is low. Yes, so depending on that, right? Now, the regional wealth tax is region as well. It's all Andalusia, for example, or all Catalonia. It doesn't matter if you live in Barcelona, Girona, or in Tarragona, right? So depending what tax you're talking about or referring to. What is this? Questions? Is it true that if I move with the entire family to Spain, we meet the substantial rule and become tax residents automatically, regardless of living in Spain less than 183 days? This is the triggering of condition number 3, potentially, right? So, I mean, it doesn't mean if all your family comes to Spain as tourists, yes, for 89 days, it doesn't mean that you became a tax resident because you're a tourist, right? So, I don't know exactly where is the line, right? If you ask for a residency and together with all your family, then potentially you don't have to spend all that time to be considered tax resident. Maybe the tax authorities consider you to be tax resident before that threshold. When are taxes due? Is there a date? I mentioned all the deadlines. Yes, 724 and 31st of March. Annual income tax, 30th of June. Regional wealth tax, 30th of June. Solidarity tax, 31 of July. And yeah, and then of course, if you're a contractor, you need to pay on a quarterly basis. Also, what happens if you're renting out your property in the US? Well, this is part of your US taxes. Yes, so you pay taxes in the US, you pay taxes in Spain, right? But you will have to pay taxes on your global income to Spanish tax authorities if you are a tax resident. So part of your global income is what you are perceiving or getting as income from your rental properties in Spain. Yeah, so you pay taxes on that, and then you credit it towards your payment of your taxes in the US. Are there benefits and resources available for a 66-year-old on digital nomad visas, autonomo, and now age 66? Yes, you have a higher allowance. As I mentioned, I think, was it 6,100 euros as autonomo? Benefits. I think the allowance goes up, but then you have to file taxes as autonomo normally for your income, etc., etc. And if you're retired, you need to pay Social Security on a monthly basis. Does it matter the month you submit your DMV application regarding autonomous tax obligation? I don't think it does. Once you file and you get your DNV, you need to register as autonomo immediately. So today in the Spanish Digital Nomad Visa group, I published a video, or I informed of a video that I did with Ainhoa Manero, where she answers the top 12 questions of 2026 for digital nomad visa, and she talks about enrolling as autonomo and social security timings for approvals. Okay, so watch this video. It's free. Give it a like. Yes, if you learn something new, and it will really help with the algorithm and other people finding it. But yes, she's an immigration lawyer. She knows her stuff. So definitely you should watch it. It is free. Of course, it's YouTube and it's free. Do those pensioner allowances apply to US Social Security? I believe so. Yes, this is part of your global income, and Social Security pays taxes in Spain. Right? So you have to translate dollars into euros. When you file your taxes using a gestor or tax accountant, yes, and they will apply the allowances for your income in general, right? So the initial allowance doesn't pay tax. So yes, and also you have allowances if if you have family, kids, you have different allowances, right? So yes, in my opinion, it is like that. So yes, I think we made it till the end of the presentation, and the questions is 404. So really appreciate everyone that joined today. Thank you so much for asking questions. I will send you the recording when we're done, and you can always reach me out at hello@spainguru.es. And remember that if you need anything, Spain is a great tool. If you're moving to Spain, you have the Move to Spain checklist, more webinars, all free, newsletter, and also here you can find finance and tax. You can find tax advice and also financial services if you need any experts. You have tax advisors, and you have tax accountants for your filings in Spain as well. So yes, I got you covered for anything you need. Thank you so much, everyone, for joining today, and see you around. Take care. Have a wonderful week. Goodbye.
Oh, and one more thing. Apparently YouTube says you're gonna love watching this video right here. I think you should watch it.